Welcome to the Winning Move Podcast. I'm your host, Stratt Brown. I interview successful entrepreneurs from around the world to see what moves they've made in their lives to get successful and, more importantly, stay successful. I'm here to make sure you can create a better life for you and your family. Let's tune in. Right, that's pretty nice, right? Thanks for coming on, Mike. Some quick housekeeping stuff.
I that down.
Oh, you're cutting out. Some quick housekeeping stuff. We don't advertise this at all. Please go like it. Give us a 5-star review on the podcast app and go share with all your friends if we bring you any value. We have one of my really good friends on today, Michael Zuber. We're going to be talking about the market, update, what's going on. And I mean, politics does play a role in what we do. You shouldn't let it deter. Just use it to help you make educated decisions. And if you guys are looking for any type of virtual staffing because you don't want to pay payroll tax, go to callmagicians.com. Thanks for coming on, Mike.
Hey, man, no problem. I love that intro, by the way. That I'm going to look forward to that every week. That got me hype. That was pretty good.
Thank you. All right, man. So did we talk about the freaking 43% hike up on taxes?
No, that came out since our last discussion. That's
let's talk about that.
Yeah. So really, when you step back, there's 3 things that are going on around real estate investing, which includes a rise in capital gains from 20 to 43. And again, if you're in California, it's 20 to 53. Let's be clear, because you have to pay the state side as well, not just federal. There's a talk about what's called the stepped up basis going away, where like if you want to do legacy wealth and you want to leave it to your kids, there's something called the stepped up basis, which they're now looking to take away. And then there is what's called the 1031 exchange, right? Something I leveraged a decade ago to go from a house to apartments. So these are all goodies, if you will, that the rich have been leveraging for quite a while. It's very clear that this administration wants to take away goodies that are often used by the rich. And, you know, taxes are going up. I mean, he's talking about spending $6 trillion in his first 100 days in office. That's got to be a record. And the only way he's going to do that is if he raises taxes. But the problem is, yes, he's going to catch some of the big players, but let's be real. They have accountants, they have trusts, they have insurance policies. They have all of these very sophisticated things. They will get around most of this. What all of these are going to hurt is the mom and pop and the baby boomers, right? If you were a baby boomer, for example, and you're 65 or 70 today, and frankly, you did one rental at a time in the 80s, coming into this year, you were feeling pretty good, right? You've owned your rentals for 30 years. They're probably paid off. They're probably cash flowing like crazy. But the last year was hard, right? Eviction moratorium, some tenants not paying. It was a rough year to be a mom and pop landlord. So you might be looking to sell soon. Unfortunately, if you bought in the 80s, you probably bought for, I don't know, pick a number, 50 grand. You know, they could be worth 400 grand or 300 grand today. Whatever. It's been 30 years, right? They should be worth more. But now if you were to take that portfolio and sell it, the tax man cometh. You are going to pay god-awful taxes. I worked with a CPA the other day, and we looked at a portfolio that was about $2 million in today's value, right? That was bought for about $500,000 in the 1980, right? We did math. So there's something called depreciation recapture, which is rough and tough 25%. Then we talked about the gain of 1.5 million at 53%. So you sell it at $2 million, you're going to walk away with like $1.3 million after 30 years, which is not what you were planning for, right? You came into this going, hey, you know, I got to pay depreciation recapture no matter what. I'll pay my 20 points of capital gains. You were probably looking at more like, 1.6. So just with if it gets approved, you're going to be out an extra 400 grand. And again, I know teachers and policemen who never made more than 60 or 65 grand that did it the right way, right? What do we tell people all the time, right? If you want to be the millionaire next door, live below your means, buy a few rental properties, pay them off. And then when you're done, sell them. But now it's sort of like playing Monopoly and you're just about to win and somebody knocks over the board. They're coming after you. There's going to be a lot of people hurt by this. But the real problem is what's going to happen is we're starving for inventory today, right, Stratt? And that's what we need is inventory. And what's going to happen is guys like me who bought a bunch of houses in 2010 for nothing, we're just not going to sell. I told you before when we talked 6 months ago, I want to sell. I want to put a house on the market that would be first-time home buyer. That's what I wanted to do. And then I was going to 1031 into an apartment building because I like owning apartments when the trade-off is right. But now they're going to come after me and I'm going to go F you and I'm just going to keep the house. So
Yes.
first-time home buyers lose, rents go up. I don't know why what boggles the mind is Econ 101 is supply and demand. We have no supply and we have a ton of demand, but everything coming out of Washington is more demand and less supply. I mean, do they want it? I mean, maybe their answer is let's double the prices. Let's give everybody a 40 or a 50-year mortgage. I mean, I just don't understand, Stratton. It's crazy.
I don't, I see owner finance being a big thing.
Bingo.
Right. But then I'm talking to people. I was talking to what's it called? Self-storage seller today. And he said, Biden's going to raise my taxes. I'm selling this year.
Yeah.
He's like, I'm selling this year before I have to sell next year because I won't get any money for it.
Yeah. So this is going to happen. So before January 1st of 2022, we will have some people just like that. They're going to go, F you, I'm done. I'm going to sell now. I'll take a slight discount. I'm out. That's going to be a tiny number, but it's going to be some. But what's going to happen after January 1st is everybody that's in my situation, we're going to go, nope, not selling now. I promise you, I have no interest in giving somebody 53% of my gains. I can keep the house. No problem. It's okay. So all that stuff that I would have sold next year and the year after and the year after and moved up to apartments and again provided value and quality, I just won't move up. I'll just keep the houses. It's crazy.
Well, like they're trying to attack the rich, right? Saying, oh, Amazon needs to pay more taxes. Amazon is 14,000 or 1,400 separate companies that are a conglomerate. And some of them are taking losses. And they're technically based out of the Virgin Islands. Like the way they have everything set up, they're not going to pay fucking taxes anyways. Like you guys can't you can't get them. That's the way it is. Most big businesses are not paying taxes and you're going to hurt the little guy. I still think anyone who makes $1 million is still technically a little guy.
Wow. Yeah. I mean, the problem is $1 million. $1
million isn't a lot of money, bro.
No, I mean, top line. I mean, the top line, $1 million is not much. Bottom line, $1 million quite a bit. But there's a big gap between top and bottom.
Right. But I mean, let's say you make $1 million and then you got to pay taxes on that. And you're taking home 5, 6.
Yeah.
That's a big jump for me.
Oh, in California, it's like you'll take home like $470.
Right. That's crazy. So like at that point, $1 million is not a lot of money.
No, that's what I'm saying. $1 million top line, you're right. $1 million bottom line, meaning net income after everything. That's okay. But that means now you're making, 2.1. Yeah.
Right, but that means you made 2.1 and you gave away that
net
much.
of 1. Yeah, it's nuts. Yeah.
What's going on, Mike? What happens if you're below the bottom line? I'm not like Stratt.
You just keep working, man. Just keep on working. You'll get there.
Man, I think it hurts I think it hurts everyone except the conglomerates. I think people who are millionaires get hurt, and that eventually hurts the other people, right? It hurts everybody except the people who they're trying to affect.
Yes, they are going after the 1%. And they'll get a couple of them, but they're not going to get many of them. They're just not. It's going to all fall on the middle class. The thing that bothers me about this is I believe I believe when you're in government, you act one of two ways. You either reward and encourage work and risk taking, right? Investing capital, risk. And if you win, you get paid. Or you institute a policy where you try to make everyone equal and you just give stuff away and you disincent work. I know which side of the equation I like. It seems like, a lot of people like the other side.
like, where is the incentive for me to go take a risk to give away half of my earnings? To where most of these entrepreneurs, right, are making zero, nothing for years. And then you see them get wiped out by COVID for all the restaurateurs, right? All of them were barely getting by, and then they get wiped out by this. And then what? So you hit the COVID, you can't work. And then now you got to pay more taxes on if you did even make it through, to where like there's no incentive for entrepreneurship and commerce. Like there's no room for
again, what's going to happen? This is, I mean, one thing that is obvious about the rich, and I'm calling the rich anybody who invests. If you have discretionary income and you're investing, whether it's risk capital in the market, in crypto, in real estate, whatever, right? You have risk capital available. I'm going to call you rich in this example. Okay. They have essentially changed the equation on what I want my return to be. Because maybe before you would do, hey, I'll take an 8% return. Now with the tax profile and the risk and the chances of the rules changing, you're not going to accept 8. You're going to want 12, 15, 18. We are going to see a whole repricing of multifamily and commercial real estate. They're coming after the syndicators, after any of these big players. And it is coming. And capital is going to be a lot scarcer, or capital is going to want a bigger return. I'm not going to take 8% if I got to give 4% to the government. Not going to happen. Right? I want 12 or 14. And that's going to reprice assets. And it's, I mean, this is all just, it's all dominoes. If you know the rules change, you just set up the dominoes and they're just going to behave different. Like for me, it's so obvious. I was going to 1031 out of a house into an apartment. I did it last time. It's in my book. I went from 8 houses to 80 units. I wanted to do it again, except this time I wanted to go from 40 houses to 400. I was doing it on purpose. And I plan to start in 2023, maybe 2024. But you know what? You take it away, I'll just keep the 40 houses. No problem. First time home buyers lose. Houses aren't coming on the market. We're just going to hold for longer. Right. You can't force me to sell, right? No, I'm not going to give you 53%. Sorry.
Well, and then we still have inflation, right? So we have inflation and taxes.
Yeah. Dude, so rents are going to go through the roof.
But you have to get 8% to be like, have your money just not lose value. To be 100% realistic.
Sure.
So you got to get an 8% return on your money not to lose value. So now you're truly getting a 4% return on your money. If you're at 12.
Exactly. So first and foremost, we should state that all of these are proposals. All of these are going to be left up for negotiations. Nothing is signed off yet. But it is very clear they're coming after real estate and they are coming out big. But yeah, the only thing that's going to happen is risk capital. You're either going to leave dead money. Dead money for me is those 40 houses in our example. I have significant capital in those investments. It's dead money, but it cash flows. So be it. But what's going to happen next time is my risk capital profile is going to be, it just changed and I'll go do something else. You're just going to get a lot less investment, a lot less company formation. It's going to be a different world, man. It's going to be a lot more of adjustment for the middle class than they're thinking, because who has the risk capital? It's the rich, right? And you're going to change the rules. They're going to behave different. That's what rule changes are. If you want the rules to change, like you want to stop fighting in the NBA like they did with the bad boy Pistons, well, you just kick everybody out of the league or you fine them $1 million or whatever. Guess what? No more fighting. Well, if you don't want the rich in real estate, fine. Just raise the taxes. They'll go do something else. It's crazy.
Right. They'll find a new vehicle. They'll find a
new it's fine with me. I'll go. You know what's going to happen? They're going to probably go to Europe or Asia. They'll just go invest in their economies. Fine.
Right. That is a really good point. And that's one thing that you really don't even think about. To where there's Sam Zell talks about we invest all over the world and do developments.
Exactly.
That's what you're gonna have to do now. But I mean, that's pretty cool to think about. We're buying I don't know how Europe's is.
It'll be Asia.
Where would you invest? In Asia?
Probably Asia. Australia, probably. Australia's been hit. Australia's had some. Australia and Canada are damn near housing bubbles when I talk to real estate investors there. But again, right now, it certainly seems like the U.S. is going to be unfriendly. I don't know where I would go. I'm going to have to think about it, though, for sure. I've looked at South America. I've been in Chile. I got a buddy who invests in Colombia. I got somebody who invested in Brazil before. I know the beauty of my channel is people are coming out from all over. I'll find some place to play.
That's crazy. Think about how much foreign money we have coming in here, though, because they know they can get good returns in real estate.
That's about to
all
stop.
That gets taken out of the economy.
That's about to stop. Yep. Yeah, Southern California, all the they always call it Chinese money, but it's in fairness, it's Asia money. They always called it Chinese money. Yeah, there's a lot of houses down there that sit vacant. Maybe a college student, lives there. They live in one room and a bathroom and a kitchen. But yeah, that is all money that left a communist or a socialist economy. It's going to go back. It'll go somewhere else.
And so I don't think they'll get rid of 1031 exchange. I really don't.
Oh, I think they will. The one I don't think to get rid of is stepped up basis. So my ranking is least likely to get rid of is stepped up basis, then 1031, and then they're absolutely raising taxes. I think the 1031 is going to go away. I think they're going to set a limit so they pretend that mom and pop are okay, like 500K limit or something. But I'm fairly certain they're not going to let any big syndicators and $10 million investors use it anymore. They want that money right now.
That is fucking bananas. But like too many congressmen own real estate and they use 1031s to make money.
They do. But they're going to just sit on dead capital.
Themselves.
Oh, they are. They're the crazy thing is they only need 2 or 3, I don't know. It maybe. I think 1031's gone because what they announced the other day about that 500K limit, I'm like, that's what they're going to do. It'll be all around where the governor is. Because I guarantee you, they do not want somebody like Donald Trump or any of those investors who are playing at the $100 million levels to keep trading up and not paying the IRS. The 1031 for the big boys is gone, and that is going to disrupt the economy. That's my opinion.
I mean, but what's it called? We still have opportunity zones, though. And so,
for a couple more years.
Stuff into opportunity zones.
Yeah.
I could see that happening.
It's a different world, man. It's this. They got to pay for all this spending somehow. It's bad.
I don't believe the 1030. That'll blow me away.
I'll bet you $1. I'll bet you $1.
Okay. I'll bet you
down.
Bet you $1. Down. Bet's good. From Colombia, buying slumlord houses to buying drug lord houses.
Hey, dude, it's actually funny you mentioned that, Michael. It's actually Medellin, Colombia. So obviously everybody knows was it Pablo Escobar was there running shit until he got killed. But I've actually been to Medellin. He paid for my trip down there to go watch the real estate. It's actually a pretty nice city. I was there like 4 years ago. I felt safe. It was good. He's dropped like $1.5 million on 4 or 5 different units down there. He's not playing around, my friend.
Oh. So what else is going on in the markets besides taxes going up?
Well, we had this week was big, right? The S&P 500 had 30% of the companies report, right? The big boys, Tesla, Apple, Facebook, Alphabet, Google, all of them blew it out as I expected them to. But the stock,
they performed above.
Yeah, they beat estimates for top line, which is revenue, and they beat for bottom line, and they beat by a mile. I mean, like one of them they wanted $12 and they made like $18 or so. I mean, just stupid numbers. And but the stocks didn't pop, right? When you look at what happened in the market today, the Dow and the Nasdaq were down for the week. The S&P I think was green by a little bit. It's not enough anymore. I think more and more people are looking out in the year and going, hey, that last year was over. We're now standing in the sunlight, like I keep talking about. Now it's time to invest in restaurants and cruise lines and hotels because, people want to get out of their house. And airfare's up, hotel prices are up, Airbnbs are up. I mean, you can't travel anymore. So, dude, this grand reopening is going to be awesome. It's no longer going to be store closings. It's going to be store openings. I think 2021 is going to be an awesome year going forward for growth. Q1 GDP was 6.4%. I think Q2 could be 10%, double digits. For our economy, our size, that's massive. It's going to be pretty cool.
So you think everything's just about to reopen up completely?
Well, dude, California is June 15th. New York's July 1st. The two states that are led by, crazy ass governors are going to open up. And I mean, New York said the New York, the Garden, full capacity as of July 1st. I mean, that shook me. I'm like, you're not even going 50%? Yeah.
Really?
Yeah, they're already open. They could take like 4,000 fans now. But they're like, no, July 1st, start booking concerts now. Full capacity. It's crazy. This is going to be a crazy end of the year.
I don't think LA's bouncing back for 3 years.
Define bouncing back. I mean, what do you think's going on in LA?
No business. I don't see commerce really coming back for 3 years. You've destroyed a lot of smaller people to where they have been there for years. And like you're running a restaurant, you're at 3% margins, dude.
Yeah.
Like you aren't lasting.
No, restaurants have been decimated. But here's the deal. I mean, there's two sides of me, right? I talk about being in the tunnel or in the darkness and in the light. When you're in the darkness, we had record store closures. We had windows boarded up. But here's the deal. Those landlords, most of them still own the restaurant space. It's the restaurateur that lost it because they couldn't pay the rent. There's no customers, blah, blah, blah. That landlord is like, shit, I got a fully functioning restaurant. I just need somebody to come in, rebrand it, slap some paint on it. Let's go. So we're going to see a lot of reopenings. Will LA be what it was in 19? No. But will LA be twice as good as it was in 20? Absolutely. But here's the problem about LA. You're chasing away the 1%. Gavin Newsom has chased away. Gavin Newsom is the number one real estate agent for Vegas and the number one real estate agent for Austin, Texas. He has chased wealth out of this state. And we're going to pay for that because the 1% in California pays over 50% of our state taxes. And he's just chasing them out with a stick. It's crazy.
Same thing happened in New York with Miami, right?
Yep.
What was his name? Cuomo. He pushed everyone out of there.
He just raised taxes on the 1%. I mean, I had a saying when I was running sales teams, right? When the economy's good, kind of you're fenced in, right? But when the bad economy comes, right, you don't want to beat the dog because the dog will just run away, right? I mean, I don't know what he's doing. He raised taxes on the rich right now. And they're like, dude, I'm already living in Miami, my second home in Miami. I'll just change my residency. What are you doing? It's crazy. Crazy.
But then, what did you see the thing they're trying to do in Washington? Because who else? Jeff Bezos, Bill Gates, and someone else live up there. And they're trying to raise taxes on them. And what are they going to do? They're just going to move. It's like you're not going to capture this money. I don't get what they think they can do because one thing that comes with wealth is mobility.
Dude, all they got to do is file a change of address. They already own the other homes. I mean, Jesus Christ. Yeah, it's comical. It is really comical.
So you think everything's going to open back up? Do you see people going out and like actually participating? Mm-hmm. I see a lot of people still scared and like who won't do it.
Oh no! See, this is consumer psychology 101. I can already tell you the dominoes are falling. The kids, the younger folks, and by kids, I'm almost 50, so I call 30-year-olds kids. I don't mean any disrespect. But they're already start out socializing. They're going to start, taking pictures and being at concerts and restaurants and all of that. Then that'll pull people forward, and then that'll pull people forward. And oh, by the way, people in my age group, lots of them have had at least one shot. Most of us are about to get our second shot. Dude, I'm going to feel like fucking Superman here in about 3 weeks. I'll be like, yeah, let's go. I'm going to go nuts. So, yeah, people are going to start. The summer is going to be bananas. Bananas.
I hope so. We need to throw. I want to throw a meetup at the hub.
Let's do it. Yeah, yeah. Let's go.
I want to do who was I talking to about the other day? But same thing you were talking about. Like we'll just have a big barbecue in the back.
Yeah, it's got a big ass parking lot. Let's use it.
Right, massive parking lot. Have a big park because like I don't get to see anybody anymore.
Yeah, let's fix it. I mean, I'd love to do one once a month during the summer. Oh, shit, even once every 2 weeks. Once we get going. I mean, at this point, I got all kinds of meetup money I haven't spent. So let's go spend it all this summer.
So what else is going on in the markets that I've missed? The big thing for me that I was taxes, but at the same time, you have to be smart enough to just play the game. I truly think most people are going to play the game, and they're just going to, okay, I got to do this else. Call up my attorney, call up my tax attorney. Like, hey, what do I got to do now?
Yeah. The other thing I want to say about this is most of you, one of the things I try to do is be positive, right? If it's bad, I'm going to tell you it's bad, but I try not to fear monger. One of the things that people watch this, and they certainly watch my channel, is don't worry about it. You're going to do one rental at a time. The whole goal is to buy it, own it forever. So it doesn't matter. It doesn't matter what capital gains is. It doesn't matter what step. It doesn't matter. Just because this president wants to take it away doesn't mean the next one won't bring it back. Don't be distracted. Don't get into a little hole and self-talk and get all afraid of the big bad wolf. Who cares? Go take care of your family. Go buy your first rental. Make sure it's a great deal. Let's just go. Stop the nonsense.
Well, I don't watch the news.
Good.
Good. I watch Michael Zuber's channel. That's my news.
I appreciate that. Thank you.
That's my news, because the same thing. Like it's so negative and fear mongering all the time, to where it's like, no, like I'll ever play the news in the house.
Yeah.
At a point in time, they were playing it for like when COVID just happened. It's like, no, we got to turn the shit off. Like, I don't want.
Yeah, I mean, all I want to do is call in the bed and hide under the covers. I mean, god damn.
It's crazy. What's going on, Dino? Master Dean.
Oh, I guess Dean didn't realize he's the cook.
Yeah.
He's gonna be behind the grill. Big old fullback football player. I bet he can handle the grill.
He'd be able to do it. And let's talk about owner finance.
Yeah.
So as this comes up,
yes,
and you do start to like think about owner financing, how are we going to pitch to these other property owners that will owner finance to us?
Yeah. So
for these people who are interested in offering that.
Yeah. So here's the big deal, right? So when you talk owner or seller financing, whatever you want to call it, it's the same thing. The first thing you have to do is you have to start at the top, and you need to know about that seller. The first question you need to figure out is, do they have lots of equity or no equity? Because the answers are vastly different. If they have lots of equity, you talk about owner carry, you talk about saving taxes, you talk about delaying taxes, all kinds of that stuff. That's that equation. The other one, and this one is going to be awesome for real estate entrepreneurs like yourself. So let's just play this out. Right now, we all know there's about 3.2 million folks in forbearance. We also know, we talked about 2 or 3 weeks ago, that the government is going to bend over backwards for what's called avoidable foreclosures.
Yeah.
So what is essentially going to happen is a lot of people are 20, 30, and yes, even $40,000 behind. Normally, they would foreclose, wipe it out, done. Not today. Today, I'll just use the 40,000 as the example. They're going to take the 40 grand. They're going to create a second mortgage. They're going to stick it on that house. It's going to have 0 interest and 0 payments. But there's debt there. And what's going to happen is these individuals are going to be stuck in that house because they have no equity. Yeah, the first shows equity, but there's this stupid second sitting out there that they never think about. And then they go to sell, there's no equity. So here's the deal. And oh, by the way, I promise you folks, we're going to have a recession in the next 3 to 6 years. So what's going to happen is all these people that have this debt that they're just saddled and stuck with in 40 years, and it's going to be terrible. They're going to be in a financial state where they need to sell. And the only answer is creative seller financing. Because A, they're going to have a cheap ass interest rate, but they're going to need out. They're going to want to move or job change or divorce or whatever. But the only answer is going to be subject to or some kind of other, creative financing. That's going to come. That could be the way I add more houses in the next 3 or 4 years. And it's not, you may have to do $2-3 grand for, moving money or something, but yeah, you're going to be able to pick up houses and remarkable debt structure very easily in the next recession. So I think there's 2 creative angles, and you got to know which one, because if you talk to somebody about saving taxes when they have no equity, it's a waste of time. So it does start at the top with that discussion.
What's going on, Andrew? Andrew said tunnel vision, can't watch the news. 100%.
100%. Yeah. It scares me.
We, Kyle and I, one of our rentals is structured that exact same way. So there's that front end debt. Then there's a second mortgage in place to where there's 0 interest, 0 payments. Well,
loan mods.
Yeah. Well, I think there's payments, but there's just 0 interest. Actually, no.
No, there's no payments unless you refi or you sell. That's when they're going to get their money back.
Like, it's just there.
Just
hanging. We have like a $30K there on the back end of it.
Yeah, which means that if that's whatever you guys do, if you want to be hunting these, go look for loan mod deals, because there's a second that's just sitting there that the owner's going to forget about until they have to leave in an emergency, and they're going to be.
Without a doubt. And it's the same thing. They had no equity, and so
the only answer. Exactly.
There's the only answer. I was like, I can't do anything else but buy this thing subject to existing mortgage.
And oh, by the way, I will buy all of them, right? If you give me a mortgage that's $1,200 and I can rent for 16 or 18 or 2, I will buy all of them, and I will pay you moving money. Fine. Who cares? I want every 40-year loan at 3% I can buy. All of them. Just give them all to me. I'll take them all.
I wish we would have bought that first subject to house that we had. What was it? Like a year and a half ago, with the detached garage.
Oh, I remember that one. Yeah.
To where it was like thin, but like looking back now, that would have been a good deal.
Yeah. I don't mind making a mistake once. I hate repeating mistakes. So we won't do that again.
Right. But yeah, I thought looking back at that now, I was like, oh man. I was thinking about I drove by it the other day. I was like,
I just need to remember making a mistake.
It would have been such a better deal. I don't really have anything else for you. Do you have any other market updates for the viewers and the people?
No, I just got to tell you, next Friday is a big day. Next Friday, they are reporting the April jobs creation. So for March, just so everybody remembers, it was a blowout number at about 916,000 jobs were created in the month of March. That's a big ass number, right? I think April is going to be at least 1.5. So if the number is 1.5 or above, Jerome Powell better get off his ass because inflation is coming. So we'll see. I mean, Friday's a big day. The May 7th report of April jobs number or jobs creation is probably the most important metric for next week.
Okay.
And it's Friday morning.
And so what are the possible outcomes of this?
So there's really three answers. One, it could greatly disappoint. People are afraid of COVID lockdowns. Hotels are not hiring. People don't want to go back to work. They goosed up unemployment. So if it comes out like 800,000 or less, that'll be a huge disappointment. And if that's the case, then Biden's right. And Jerome Powell is right. Right. We need more stimulus because the American economy is struggling. If it's 800 or less, Biden's right. If it's 1.3 to 1.5, actually, if it's let's go. If it's 800 to like 1.3, it's kind of too close to call, right? Okay. Could be right, could be wrong. But boy, if it's above 1.5, woo, Jerome and Biden are wrong. Right? There's a lot of jobs. The economy is jumping. So that's kind of where it's at. He's either going to be right, it'll be too early to call, or he's going to be way, way wrong. And way wrong.
Be really wrong.
I think he's going to be fucking way off. I think they greatly underestimate the American spirit and the capitalism. I think they're damn near socialists, and they don't realize how powerful the capitalist economy is. And I want to believe in the American system, and I think it's going to be 1.5 or above. Yeah.
I mean, yeah.
We'll see. The data's done. We got to just wait for the report now. So
I'm going to tune in for that. I'm excited for that.
Friday morning, baby.
Well, thank you so much for coming on, Mike. Oh, the course goes up in price tomorrow. Let's talk about that.
Yeah. So I've created a course called How to Get Started One Rental at a Time. It's all about doing the work, looking 20 minutes a day. It's got over 2,000 students in it. It had over 100 students sign up in the last 2 weeks, 50 students in the last 4 days. The price is $199. And because of Stratt, it's going to go up 50% tomorrow to $299. So.
Awesome. Thank you so much, man. Thank you guys so much for tuning in. Please go and share this with your friends if you got any sort of value from myself or Michael. And Michael, where can people find out more about you?
Go to Google and type in One Rental at a Time. You should get books and pages and Instagrams and audio and all that stuff.
All right, guys. Thank you so much for tuning in. Thank you so much for tuning into this episode of the Winning Move Podcast. I hope it helps you make all the right moves in your life and business. Please make sure to go like and subscribe on any podcast platform that you're listening to, and make sure to go follow me on Instagram at StrattDaddy. Thank you guys so much. I'll talk to you soon.